Empires don't collapse in headlines, they collapse in spreadsheets. In 1575, Spain stopped paying its creditors, then defaulted again 21 years later. Its empire didn't fall overnight. But the moment silver stopped building new fleets and started covering old interest, the collapse had begun. In 1931, Britain abandoned the gold standard. The pound survived, but its empire did not. The next 4 decades were a slow-motion dismantling, from India's independence to the loss of the Suez Canal. The pound faded. The crown followed. In 1989, the Soviet Union's data stopped making sense. Gosplan reports froze. Inflation estimates vanished. Production numbers were falsified. And 900 days later, the USSR was gone. These weren't wars. These were internal failures. Quantitative death spirals. All of them peaked at the same point, stage 6, when capital no longer creates growth and the system begins cannibalizing itself. And now, in 2024, the BEA just confirmed it. The United States has entered stage 6, real net domestic investment, the engine of future productivity, has turned negative. The machine is no longer building, it's consuming. Spain lost its fleets. Britain lost its currency, the Soviets lost control, and America just lost the data. This is how empires end, not with revolution, not with invasion, but with spreadsheets whispering, "It's over." Empires don't fall by accident. They fall by pattern, a 7-stage descent coded into the structure of power itself. This framework, the 7-stage empire collapse model, isn't speculative. It's empirical, derived from centuries of post-imperial unravelings. Spain, Britain, the Soviet Union, and now the United States. Each stage isn't a moment. It's a phase. Progression is slow at first, then irreversible. Stage 1, the rise through real productivity. Stage 2, the pivot into financialization. Stage 3, military overreach. Stage 4, internal polarization. Stage 5, monetary distortion. Stage 6, data and investment breakdown. Stage 7, the loss of reserve privilege. Empires often drift through the first 5 stages unnoticed. Wealth masks decay. Political denial suppresses warning signs. Growth continues, on paper. But stage 6 is different. Stage 6 is the first quantitative collapse. Real investment falls below maintenance. Debt payments exceed capital formation. Public balance sheets turn predatory, financing old promises by liquidating the future. It is the empire's cannibal phase, and in late 2024, the Bureau of Economic Analysis, BEA, confirmed it. Real net domestic investment in the U.S. is now negative. That signal only appeared once before in modern America, in 2009 during a global crisis. But this time, there is no external shock. The rot is internal. The empire is aging from the inside out, and history is clear. Once stage 6 begins, there is no reversal. Every empire begins the same way, not with conquest, but with production. Stage 1 is the rise through productivity. Real output, trade surplus, infrastructure expansion, trust built not through fiat, but through function. Spain in the 16th century didn't just plunder gold, it mined, minted, and mobilized it. The Spanish Empire built ships, roads, ports. Silver flowed through Seville like blood through an artery. For a time, it wasn't just wealthy. It was functional. Britain's ascent followed a similar arc. The steam engine, railways, global textile exports. The Royal Navy protected trade, not just territory. From 1815 to 1913, Britain ran consistent trade surpluses, financed global insurance and shipping, and anchored the world on the gold standard. The United States entered this stage after World War II, with 50% of global industrial output. From 1945 to 1971, it was the unmatched producer. Steel, autos, electronics, planes. It exported more than it imported. It lent more than it borrowed. It built the system everyone else relied on, from Bretton Woods to the Marshall Plan. Productivity wasn't optional, it was survival. Empires only rise when they build faster than they consume, and for a few decades, they all did. But no system sustains growth forever, and when productive output plateaus, the empire shifts, not to rebuild, but to extract. That's when Stage 2 begins. Stage 2 is the pivot, from production to finance, from exports to debt, from value creation to value capture. It begins innocently. Productivity slows. Trade balances tighten. Empires, unwilling to shrink, turn to their capital accounts. And for a while it works. Spain began lending its silver abroad, to allies, to colonies, to mercenaries. Instead of building new output, it exported old treasure. Loans replaced logistics. The crown extracted from future promises, not present factories. Britain followed the same arc. By the late 1800s, its industrial edge was fading. Germany and the United States were rising. But the City of London remained supreme. British capital financed global railways, mining, and imperial projects. Bonds replaced ships. Debt replaced goods. And by the 1980s, the U.S. had made the full turn. Real wages stagnated. Manufacturing offshored. But Wall Street surged. Financial services exploded from 4% to over 20% of GDP. Corporations stopped reinvesting. They bought back stock. The U.S. economy no longer grew by making, but by monetizing. This is financialization. The economy becomes self-referential. Equity values detached from labor, credit expansion detached from savings. Consumption is no longer funded by surplus, but by debt. In this stage, the empire still looks healthy. Markets rise, incomes grow, balance sheets expand. But beneath it all, the industrial core has been hollowed. The empire has begun extracting from itself. And with that pressure comes militarization. Stage 3 is militarization, not for conquest, but for compensation. As productive power fades and financial leverage peaks, empires turn to the last lever they control: force. Not always kinetic, but always expansive. Bases, fleets, foreign entanglements, projection. Spain's military reached its zenith just as its economy began to crack. The 30 Years' War drained treasury after treasury. By 1640, nearly 80% of Spain's annual budget went to war finance, not commerce, not development, not infrastructure. Naval debt exceeded port income. Guns replaced grain. Britain followed suit. By 1914, the Royal Navy stretched across the globe. But Britain itself was fragile. War debt from World War I crippled its gold backing. By 1945, it was borrowing from the U.S. just to maintain basic rations. The Suez Crisis in 1956 sealed it. Military projection without economic muscle was humiliation, not dominance. The United States now spends $858 billion annually on defense, more than the next 10 nations combined, over 750 bases in 80 countries. Permanent proxy footprints in Ukraine, Taiwan, Syria, Red Sea lanes, all while running trillion-dollar deficits and importing key materials from strategic rivals. Military scale becomes a performance, a signal to markets, a distraction from fundamentals. But the danger is deeper. When an empire leans on force to hold its system together, it accelerates internal decay. Trust erodes, budgets fracture, oversight collapses, and dissent gets treated as disloyalty. The state becomes brittle, not because it fights, but because it has to. And while the weapons grow louder, the society grows quieter. That's when fragmentation begins. Stage 4 is internal polarization, when the empire turns inward and fractures from within. The external threats still exist, but the real collapse starts at home. Political gridlock, institutional distrust, cultural fragmentation. Fiscal cliffs become permanent terrain. In late imperial Spain, the nobility resisted taxes. The crown was forced to borrow, not govern. Tax burdens shifted to the poor. Riots, rebellions. Catalonia and Portugal both revolted in 1640. The empire's body remained, but the connective tissue was gone. Britain's post-war decline followed the same arc. Labour and conservative governments oscillated violently. Unions paralyzed rail, coal, and electricity sectors. Inflation exploded. Bankers fought nationalists. Cities decayed. The social contract splintered long before the empire officially ended. The Soviet Union was perhaps the most extreme. By the 1980s, ethnic divisions hardened. Moscow ruled, but the republics obeyed less. Armenia, Georgia, the Baltics. Gorbachev's reforms came too late. Glasnost unlocked criticism and broke consensus. Bureaucracy stalled. Productivity collapsed. And the USSR died. Not from war, but from gridlock. Now the United States faces the same symptoms. Debt ceiling crises have become annual events. Two political parties share no fiscal baseline. Federal agencies are paralyzed, shut down, defunded, relitigated. Trust in Congress is at an all-time low. Urban versus rural, red versus blue, entitlements versus defense. Every budget cycle becomes a battlefield. Meanwhile, the system keeps borrowing, just to stay open. The problem isn't disagreement, it's irreconcilability. And while the internal organs of the empire fight, the blood flow stops. This is when empires become paralyzed. They don't fall, yet, but they forget how to walk. And into that vacuum comes the most dangerous stage of all, monetary distortion. Stage 5 is monetary distortion, the point where money loses meaning and belief replaces backing. Every empire eventually spends more than it earns. But the collapse begins when it prints more than it can justify and asks the world to pretend nothing changed. Spain debased its silver coinage repeatedly. The vellon currency was watered down, its metal content diluted. Inflation soared, trust eroded. Traders demanded gold, and the crown, desperate to finance war and luxury, defaulted again and again. The coin said empire, but they bought less every year. Britain's monetary crisis came through abandonment. In 1931, it dropped the gold standard. The pound fell. By 1949, it was devalued again, then again in 1967. Each time, the Bank of England said stability had returned. Each time, inflation and unemployment rose. Sterling was still printed, but no longer believed. The Soviet ruble was never convertible. But its distortion came in dual pricing. One set of prices for official reports, another in black markets. Inflation estimates were falsified. Barter returned. Trust collapsed not just in the money, but in the numbers themselves. And now, the United States. Since 1971, the dollar has had no anchor. Since 2008, no constraint. Since 2020, no discipline. The Fed printed $4.6 trillion in 2 years. M2 exploded. Treasury yields inverted. CPI broke 9%. Asset prices soared, then cracked. The dollar still buys, but it no longer signals. Because fiat only works when it's backed by faith, and faith only works when it's earned. Today, the world holds dollars, but diversifies away. Central banks are buying gold. Trade is shifting to yuan, rupees, crypto rails. The IMF calls it currency fragmentation. It's really stage drift. And once money becomes elastic, the system becomes plastic. It bends, it breaks, and it stops investing in itself, which leads directly to the terminal phase. Stage 6. Stage 6 is the collapse within. It's when the empire stops building the future and starts liquidating it. This is the terminal stage, not because of revolution or invasion, but because capital formation turns negative. The empire becomes a machine that consumes itself. Spain entered this phase in the early 1600s. The silver had run dry. Port infrastructure decayed. Roads fell apart. Industrial investment vanished. All cash flow went to debt service, not productivity. Between 1600 and 1650, Spain defaulted 4 times. There was no external enemy. The failure came from within. Britain hit the same wall in the 1960s. Productivity stalled. Manufacturing collapsed. The government nationalized industries just to prevent total breakdown. In 1967, the pound was devalued again, triggering a collapse in investor confidence. Domestic investment cratered. Britain was still an empire on maps, but economically, it had already died. The Soviet Union crossed into stage 6 quietly. Gosplan stopped publishing reliable data. Industrial inputs were underreported. Output was overestimated. The state injected fake numbers to hide real decay. Between 1985 and 1990, capital stock shrank. Real investment turned negative. By the time Western economists realized it, the USSR had 900 days left. Now, in 2024, the United States has entered this exact stage. The Bureau of Economic Analysis, BEA, just revised core national data. And for the first time since the Great Recession, real net domestic investment is negative. What does that mean? It means the United States is spending more to maintain decaying capital than it is creating new productive assets. Highways, bridges, power grids, internet infrastructure are all degrading faster than they're being replaced. The engine is still running, but it's burning its own parts. Meanwhile, federal interest payments have surpassed $1.2 trillion. That's more than the U.S. spends on defense, more than Medicare, more than every discretionary program combined. And that interest isn't buying new assets. It's paying for old promises. In the 1950s, every dollar of federal debt produced $1.76 in GDP growth. Today, every dollar of new debt produces just $0.61. This is capital death in real time. The IMF has noted the divergence. The World Bank has lowered U.S. productivity projections. Fred data shows net private domestic investment trending negative. Treasury auctions are weakening. Foreign demand for U.S. debt is drying up. This is how empires die. Not with collapse, but with cannibalism. Investment disappears. Maintenance becomes survival. And the empire becomes a self-consuming loop. Debt to pay debt. Interest to pay interest. Decay masked by digits. Spain couldn't reverse it. Britain couldn't reverse it, and the Soviets never even admitted it. The United States just joined them. Stage 7 is final, not symbolic, not political, final. It's the loss of reserve privilege, the moment when the empire's currency is no longer trusted to store value, clear trade, or anchor markets. Once that function is gone, the empire follows. Spain lost its reserve status in silence. By 1650, Spanish silver coins, once global units of trade, were being rejected in Asia, Italy, even by Spanish colonies. Traders demanded Dutch florins, then British pounds. Spain still printed currency. But it no longer mattered. Britain's collapse was slower, but no less irreversible. In 1914, the British pound backed over 70% of world trade reserves. But war, debt, and monetary manipulation took their toll. The final blow came in 1965, when the IMF officially shifted global accounting from pounds to dollars. The City of London still existed, but sterling no longer anchored the world. The Soviet ruble never achieved reserve status, but its collapse followed the same path. After 1987, Eastern Bloc trade stopped clearing in rubles. It moved to barter, then dollars. The USSR still printed rubles, but they were ignored, even internally. A currency can survive devaluation, but not irrelevance. Now, the US dollar. From 1999 to 2025, its share of global reserves fell from 85% to under 58%. That's not fluctuation, that's a run. Saudi Arabia is pricing oil in yuan. BRICS nations are building non-dollar settlement systems. Central banks are buying gold at the highest rate since 1967, not because of inflation, but because of distrust. Treasury demand is weakening. The average maturity of debt is shortening. Foreign buyers are stepping back, and for the first time since 2001, the U.S. had to auction treasuries at a premium yield to close bids. This is how reserve loss begins. Quietly, technocratically. then suddenly. And once the currency is no longer trusted, the empire that printed it no longer matters. Because empire isn't about tanks, it's about trust. And once that's gone, there's no war to win, only silence. Empires don't announce their collapse. They continue performing, long after the system underneath has failed. Flags still wave, politicians still speak, agencies still publish numbers, but the structure is gone. The coherence evaporated. Spain kept its monarchy after bankruptcy. Britain held elections after losing its colonies. The Soviet Union still issued rubles, months before it dissolved. Now, the United States faces its moment, not because of invasion, not because of revolution, but because the internal machine is consuming itself. Debt now exceeds 38 trillion. Interest consumes over 35% of federal revenue. Investment is negative. Reserve privilege is eroding. Treasury demand is falling. This isn't ideology. This is arithmetic. And history gives no comfort here. Once an empire enters stage 6, and none have reversed course. They adapt, they fragment, or they are replaced. The world is not waiting, it is already reallocating, away from dollars, away from treasuries, away from the assumption that Washington will always lead. This is not a crash, it is a transition, from singular empire to multipolar competition, from fiat trust to collateral-backed trade, from sovereign dominance to structural redundancy. The spreadsheet has spoken. Spain ignored it and lost centuries. Britain obeyed it and survived in a lesser form. The Soviet Union falsified it and disappeared. Now the numbers say, America has crossed the line, and whatever comes next won't be decided by politics. It will be enforced by math.